Hey everybody, today we want to talk about failure to report foreign bank accounts. Some of you may have lived overseas at one point and had a bank account, or you had relatives over there, so you may have a bank account for some reason. But it actually used to be a real problem. People would actually hide money overseas from the IRS to avoid taxation. So what the IRS did was that they really clamped down on that several years ago. And you actually have some special reports that have to be done every year to report those funds. I've got Andrew McMillan here with me today. Andrew, what can you tell us about foreign reporting of foreign bank accounts?
So the one that we see the most is if you have a bank account overseas in a foreign country, and if you have more than $10,000 in that account at any point during the year, you're required to file a form with the FinCEN. That's the Financial Crimes Enforcement Network of the federal government. It's an agency of the federal government that fights financial crimes, money laundering, things like that. So if you have a bank account overseas, it went above 10 grand at any point during the year, you need to know you have a filing requirement with the FinCEN, and you don't want to miss this. You do need to file a form 114. It's an FBAR. It's a form with the federal government. It's pretty straightforward. There's no tax you're going to pay. There's no calculation. It's just notifying them that you had a bank account overseas that went over this amount.
So, filing that form sounds pretty simple, but if you don't file it, what are the penalties?
They're significant. If you don't file that form, you could have a $10,000 penalty for non-filing, and it's going to depend on how were you willful in non-filing it, or were you non-willful in non-filing it? So if you were non-willful, like there wasn't, you just didn't know, whatever the reason may be, it's a $10,000 penalty. But if you willfully did not file that form, it can be a penalty of up to 50% of whatever the maximum account balance was, or $100 grand, and it's whichever is greater of the two. So you could be hit with a $100,000 penalty if you were considered to willfully
You had
neglect.
$1 million in that bank account.
It's substantial.
It could be half a million. I mean, they could take half.
It's definitely not something to shy away from, and it's been litigated in the courts quite a bit as well about whether or not it's willful or non-willful. When you think of willful, you usually think of like intent, like you intentionally did something, like you knew about it. I'm not going to do that, and you just totally disregard. But it's actually a much lower bar than that the IRS has to prove for it to be willful. It's kind of even like if you were just reckless and just didn't know about it, like not knowing about it isn't always going to be, a winner for you. It's not a slam dunk. So if you have bank accounts, anytime you have something foreign going on, make sure you understand your situation.
This is a major area of focus for the IRS. So it is not something that you want to ignore and pretend does not exist.
Correct.
So I always recommend, if you have anything going on foreign, whether it's a foreign bank account, foreign investments, anything foreign, you definitely want to get with your CPA. And I recommend you don't just get with your CPA, but you go find one that is familiar with foreign taxation, because your run-of-the-mill CPA is not overly familiar with how all this needs to be treated and how all the rules apply. So you really want to seek out somebody that this is what they do all the time, so that way they can advise you properly on all of the forms that need to be filled out with the IRS, because the penalties are so severe that you don't want to mess this up.